Happy Monday, everybody. Today is December 15th, 2025, and this is your Monday market update. Now, last week had all the ingredients markets tend to fixate on in December: a Federal Reserve decision, a widely anticipated rate cut, and a year-end rotation that made headlines sound more dramatic than the underlying story really was. But beneath the surface, this was less about fear, more about positioning, where leadership may go next rather than where markets have already been. So let's recap last week. Let's preview the week ahead. Markets opened the week cautiously as investors tapped the brakes ahead of the Fed's final meeting of the year. Treasury yields continued to drift higher, which weighed on equities, particularly growth stocks, as traders debated how much room the Fed will really have to keep easing in 2026. There was no sense of urgency. This was a waiting game, not a change in conviction. The Dow was down 0.5%, S&P down 1/3%, the Nasdaq was down a fraction of 1%. Tuesday looked and felt very similar. Stocks were little changed as investors stayed defensive ahead of the Fed decision. Small cap stocks quietly benefited from rate cut expectations, while mega cap tech paused after a strong run. The lack of movement told the story. Markets had already priced in the cut. Attention was shifting to the Fed's message, not its action. The Dow was down just under 1/3%, the S&P down 0.1%, and the Nasdaq was up 0.1%. Wednesday was the focal point of the week, of course. The Fed delivered another quarter-point rate cut, its third in a row, and it announced plans to buy short-term Treasury bills to support liquidity into year-end. Chair Powell emphasized downside risks in the labor market and made it clear that rate hikes are no longer part of the conversation. Markets took that as less hawkish than feared, and stocks rallied sharply late in the session. Financials and small caps led, signaling investors were already thinking beyond technology. The Dow was up just over 1%, S&P up roughly 0.75%, and the Nasdaq was up about 1/3%. Thursday extended that rally, but with an important shift under the surface. The Dow and S&P pushed to fresh record closes, while the Nasdaq lagged. Disappointing results from Oracle reignited debate around that AI spending question, margins, and how quickly those investments translate into earnings. Money rotated decisively into financials and industrials and other cyclical sectors. Market breadth improved meaningfully, a healthy sign even as leadership shifted. The Dow was up roughly 1.33%, S&P up 0.25%, and the Nasdaq was down about 0.25%. Friday brought a pause and some profit taking. Technology and AI-linked stocks came under pressure again, led by a sharp decline in Broadcom. Despite solid earnings, investors continue to rotate away from the crowded growth trades and into value-oriented areas of this market. Importantly, this did not feel like a panic. It felt like positioning. The Dow was down about 0.5%, S&P down just over 1%, the Nasdaq was down roughly 1.75%. For the week, the Dow finished up about 1%, the S&P slipped roughly 0.5%, and the Nasdaq fell about 1.5%. Despite the volatility in the headlines, this was a constructive week. The Fed remained supportive, liquidity stayed ample, and the market participation broadened, often a sign of durability rather than fragility. This week shifts the focus squarely from the Fed's decision to the data, the Fed's interpretation of that data. According to Goldman Sachs, this coming week is especially important because it fills in the gaps created by earlier reporting delays and helps to clarify whether last week's rate cut was simply insurance or was it the beginning of a longer easing cycle. Their economists expect slower but stable growth, easing inflation pressures, and a labor market that is cooling rather than breaking. We will see key economic data. I remain in the camp that this will be less and less important every day as we get closer to year end, but the data will move markets in the short term. Tuesday we'll see November jobs reports, Today we're going to see Tuesday we're going to see November job reports. October retail sales will both are going to be big numbers and they will be watched. We should see a softening labor market, not a collapsing one. Retail sales are expected to be flat at the headline level, with core spending rebounding modestly beneath the surface. Thursday, we're going to get CPI inflation data. While tariffs and select services may add some noise, the broader trend seems to be favorable and supportive of a patient Fed. Friday, we're going to wrap up with existing home sales and consumer sentiment. These, of course, will offer additional insight into housing activity and the mindset of the consumer as we head into the year end. This is also a heavy Fed communication week, and markets will be listening closely. Today, we'll hear from Fed Governor Stephen Moran and New York Fed President John Williams. Moran has recently argued policy should move more decisively in the dovish direction, while Williams has emphasized rising downside risk to employment. Wednesday, we're going to get Fed Governor Chris Waller, followed by remarks from New York Fed President Williams and Atlantic Fed President Bostic. Waller has voiced concern that restrictive policy may be weighing on lower and middle income consumers, while Bostic has cautioned against easing too aggressively, giving lingering inflation risks. Taken together, this tone among the Fed officials continues to lean cautious but supportive, reinforcing last week's message rather than contradicting it. Closing out today's market update, and this being the last full trading week of the year, this is the point in the calendar where recency bias is strongest. A few down days in tech can feel unsettling after a strong year, but markets don't move in straight lines, and leadership is never permanent. The message from last week and the data and the Fed commentary ahead is not one of instability, it's one of transition. Investors are repositioning, not retreating. As always, staying focused on the plan matters more than reacting to the noise. Have a great week.